With election now less than 2 weeks away, taxes remain a major topic for candidates. A legislative panel this week heard testimony on how Oklahoma's tax policies impact the funding of state government. While much of the focus was on taxes paid by the energy industry, experts say there are other concerns that must also be addressed if Oklahoma is to provide essential state services for its citizens.
Much of the debate in the governor's race revolves around the energy industry and how much Oklahoma should tax oil and gas production to fund state government. Democrat Drew Edmondson has proposed restoring the gross production tax to 7%, a move vigorously opposed by Republican Kevin Stitt. On Tuesday, the Senate Appropriations Committee held 2 interim studies on tax policy in Oklahoma. While the oil and gas industry has warned that increasing the gross production tax could drive production out of Oklahoma, Richard Parrish with the Oklahoma Energy Producers Alliance told lawmakers Oklahoma actually compares quite favorably to other states, pointing to a New Mexico study released in June of this year.
And typically in that study, Oklahoma was either on the low end of the effective tax rates on oil and gas production in the oil and gas industry, or was in the middle of the pack. It was certainly below a 16-state average that's referenced in that study.
While comparing energy tax rates between states can be difficult because of differing tax structures, Parrish says a comparison of Oklahoma and Texas shows oil and gas producers in the Sooner State enjoy certain advantages over our southern neighbor. While the gross production tax rate of 4.6% in Texas is slightly lower than Oklahoma's current 5% rate, and Texas has no corporate income tax, Texas firms do have to pay a franchise tax based on gross receipts.
The rate's not very high. It's 0.75%. However, one of the things you have to take into consideration is that the gross receipts tax is assessed on the gross receipts of these companies, not their taxable income. So it is a significant amount of money and comes into play and has to be considered when comparing Oklahoma with Texas.
Parrish also made note of another study which examined what factors come into play when producers decide where to drill.
Interestingly, for new drilling, incentives was at the bottom of that list.
One area where Parrish believes incentives should be considered is in marginal or so-called stripper wells. Those wells typically produce only about 5 to 10 barrels of oil a day and are taxed at the full 7% rate.
If we're not careful, we're going to lose much of that production if we don't take steps to protect it.
Oklahoma is one of the few states that doesn't offer incentives for stripper wells, which Parrish says is something the legislature may want to consider. One bright spot for revenue growth in Oklahoma comes in the form of online sales taxes. Amazon began collecting and remitting sales taxes on items it sells last year and expanded that to third-party sellers in July of this year. And eBay has announced it will begin doing the same next year in Oklahoma, Washington State, and Pennsylvania. Oklahoma and 23 other states also participate in the Streamlined Sales and Use Tax Agreement, which allows third-party sellers to do one-click registration across all federal, state, and local taxing jurisdictions. Oklahoma Tax Commission Executive Director Tony Maston says that brings a significant amount of revenue to state coffers.
Right now, we are, based upon, I looked at our first quarter collections, we collected right at $15 million, both state and local taxes. And so we're expecting in FY19 our collections from those 5,000 registrants to exceed $60 million.
The Tax Commission also has a number of enforcement efforts to ensure retailers are complying with the law and remitting taxes in a timely manner. Those efforts include closing a seller if they fail to remit sales taxes 3 times within a 24-month period. Maston says in the last fiscal year, which ended June 30th, the Commission issued more than 28,000 warnings and collected more than $25 million in delinquent taxes.
Keeping about the same pace in FY19, almost 9,000 warnings issued. We've issued 348 closure orders and collected about $7 million in delinquent tax collections.
The Commission also performs audits both inside Oklahoma and out of state to ensure compliance with and remittance of taxes. but admitted during questioning by the panel that they need more personnel to take full advantage of the online sales taxes. Mastin says for every dollar paid to an enforcement agent, $11 are brought into state coffers.
They do not